Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 24th of April 2020. And yesterday we produced a video entitled, Is $16 silver in sight soon? A brief video showing that silver is attempting to reach that important $16 level and appears to be supported at the $15 level. We also covered US unemployment figures, now stretching well beyond 26 million. On Wednesday, we produced a video entitled Data Shows No End to Stimulus in Sight, where we highlighted how pretty devastating economic news throughout Europe, the West, and in the East shows that global growth is all but collapsing, and banks and countries are injecting unprecedented levels of financial stimulus to keep their respective economies running. Now, tomorrow we shall, of course, produce our gold and silver weekly update. But today we wanted to share an article we read on Bloomberg today, which really fits nicely into two videos we published in early April. The one, why the COMEX won't default or go under, and the other, no COMEX gold, really, where we highlighted that despite all of the fear-mongering being spread about the COMEX, it will still be here long after the recent economic crisis is over, and we also highlight the reasons why we state this. Now, we've placed links to all of these videos in the description box below. Now, today's article in Bloomberg highlights that London is shipping gold bars in order to enable the COMEX to meet its obligations. Now, we get it, that everyone thinks this system is rigged, and to some extent it is. We also hear a lot of criticism that the paper price bears no relation to the physical price, and currently that is true. However, we are of the opinion that this is not because there is a gold or silver shortage overall. It's simply not available while mines remain closed or on limited production schedules, and global transportation is restricted. When all of this subsides, and we genuinely believe that it will in time, the considerable premiums currently being charged will reduce, and substantially, and we shall be back in a normal trading position for precious metals. Now, that said, we certainly believe that precious metal prices will have risen a little by then from current levels, but by no means to the levels the pumpers would have us believe, at least not in the next 12 months or so. Anyway, let's take a look at what the Bloomberg article states. Bloomberg article dated April 24th by David Stringer. Gold bars are flying 11,000 miles to New York to ease supply squeeze. Australia's largest gold refinery has ramped up production of 1 kilogram bars to ease the supply squeeze in the United States that helped propel a surge in the premium for New York futures. The collapse in air travel that's grounded passenger jets, frequently used to transport gold products, and disruptions to some refining capacities has tightened availability of the rectangular bars typically used to settle the COMEX futures contracts. We're producing as many kilobars as we can. We're probably churning out 7.5 tons of them a week at the moment, and we are forward sold well into May, Richard Hayes, Chief Executive Officer of the Perth Mint, said in an interview. A very large portion of those kilobars are ending up as COMEX deliveries. In a chaotic couple of days in late March, the premium for New York futures over the London spot price rose above $70, the highest in 4 decades. The spread has narrowed to about $21, yet that still compares with just a few dollars in normal times. The Mint, which reopened a kilobar production line in response to the supply crunch, expects elevated demand to prove to be only a short-term issue. Arbitrage issues around the COMEX will be short-lived, and I don't see them lasting for months and months, Hayes said. This is an unusual situation where you've got plenty of physical metal. It's just in the wrong form and in the wrong place. While London's gold market trades large 400-ounce bars, historically New York contracts have been settled with 100-ounce bars and kilo bars. Another outcome of the current situation has been an acceleration of the refinery's work to source additional raw material from beyond traditional suppliers in Australia and neighbouring nations including Papua New Guinea. The Perth Mint has struck new contracts with some North American gold producers and operations in West Africa in the past 12 months to process their mined material known as doré. Since supply chains have been disrupted, more global mining companies have been seeking pacts with the refiner, according to Hayes. We've certainly won some additional volumes out of Africa, and we've got another 3 or 4 contracts that are in the final stages of negotiation now, he said. The facility is also continuing to see strong retail demand for precious metals products in the United States and Europe, prompted by investor concern over the potential economic impact of the current crisis, Hayes said. For every coin we make, be it gold or silver, we could probably sell 5 or 6 of them. That strong demand will be a little longer lasting, I expect, as people have been recently very badly frightened. End of article. Okay, so, as we can see, there is gold available to meet obligations, and it's en route, direct to the COMEX. So much for its failing and imminent closure. Now, at the time of producing this video, which is 1850 GMT plus 1, for interest, US equity markets are marginally up, while European markets have closed down between 1 and 2%. Oil prices and the dollar index are steady, and gold is trading at $1,724 an ounce, and silver at $15.22 an ounce. Yes, that is the paper price. And if you attempt to buy the physical, you will pay premiums, no doubt. But there again, we bluntly refuse to pay £20 plus or $25 an ounce for an average silver coin, and similar excessive premiums for gold. Especially when we're not convinced that silver in particular will not have risen to that level when premiums do eventually come down. Now, we have, in fact, once again, contacted our local pawn shop, who isn't currently trading to the public as yet, but may be very shortly, and we've purchased another £2,000 worth of gold, and we've paid £1,365 an ounce at the equivalent of 24 karat gold for it, or $1,685 an ounce, which, yes, is a few percent below spot. Okay, not pretty coins, grant you, but essentially scrap gold. But there again, it's a far, far lower price than £1,554 that we would have to pay if we were to purchase a 1 ounce gold Britannia coin. £200 saving almost. So, to those of you who say the paper price is completely out of kilter with the physical price, yes, that is true, but not in every case, if you know where to shop. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting that we update our Richard and Greg channel every few days, and today we produced on that channel a parody based on conflicting advice we're given by our authorities and experts when dealing with the global scourge we all currently have to contend with. So until you join us again, hopefully in our Gold and Silver Weekly Update tomorrow, have a great evening and thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, Please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.